My name is Valery and I will use the HOLT lens to articulate why Shire is the better addition to your portfolio. Shire is a global biotech company which pioneers in rare diseases and specialty conditions. The majority of its revenue comes from the sale of medication in the areas of hematology, immunology, and urology. Gilead Sciences discovers, develops, and commercializes therapeutics with a focus on antiviral drugs. While both companies operate in niche markets, the size of Gilead's are larger but also more saturated. Historically, Shire's CFR levels have been above its cost of capital. Following an acquisition wave, 2013 marked the beginning of an expansion in CFR levels, which was influenced by improving asset turns and margins, resulting from the payout of synergies from previous acquisitions. Sales growth has been cyclical as the company faces competition from generic drug providers. Since the 2000s, Gilead expanded its product portfolio and delivered high CFR levels. For the years following 2009, asset turns and sales growth decreased due to increased competition, which was reflected in CFR levels and ultimately the stock price. However, the acquisition of Pharmacit in 2012 and the commercialization of Harvoni and Sovaldi has marked the last 2 years with the best overall operating performance. While the warranted price for both companies is above the market one, which in combination with the high scorecard percentages and non-negligible buy signal, the assumptions of the whole basic scenario do not accurately reflect the company's prospects. Therefore, we will use the flex model and scrutinize the main industry-specific performance drivers, product portfolio and patent rights, niche market outlook, pipeline, and competition in order to determine the development of sales, margins, and turns. Based on this framework, Shire is set for a 10% sales growth over the next 5 years, which in combination with a stable margin and gradually decreasing asset turns renders a 57% upside. On the other hand, Gilead's margins and turns are poised to revert to pre-2014 levels and sales will decline as a result of loss of patent protection and amplified competition. The appropriate sensitivity analysis suggests that Shire has a wider margin of safety. On a relative basis, both companies are cheaper than industry peers. While the warranted stock price of Gilead and Shire based on the flex valuation indicates significant upside, investors should be cautious with Gilead because of the uncertainty concerning its revenue-generating abilities. On the other hand, Shire is set to become an industry leader in an expanding market and has the operational and pipeline potential to maintain its growth trajectory if it can tackle competition from generic drug providers and government regulation. Thank you.